Hey guys, welcome back to a brand new video. I'm RexFinance, and today I am super excited because we hit the goal of hitting 10,000 subscribers by the end of the weekend. I thought that goal was a little bit of a stretch, but you guys surprised me and we got it done, and we are well over 10,000 subscribers now, and that is just an insane number to me. I'm extremely blessed, and I thank all of you guys for watching my videos and sharing my videos with your family and friends. And with 10,000 subscribers, that's really enough that if I wanted to, if every single one of my subscribers wanted to come watch me speak, I could almost fill up most college basketball arenas. That is insane to me when I think about the number of people out there that I'm influencing, as well as you guys influencing me. So 10,000 subscribers is great. But let me tell you, we're just getting started on this channel, helping each other make money. And I plan on doing this for a long time, so we might as well get started on our journey to 20,000 now. So if you guys are new or returning and not yet subscribed yet, hit the subscribe button down below. If it is not grayed out, you are doing it wrong and you need to change that. So on top of all of this, I just passed 170 paid members of Rex Nation, which is another huge number. Why would 170 plus people be paying me $5 a month just to hear my buy and sell alerts, get access to the members only Discord channel, get access to me, and get access to the members only live streams? Why? I'm a 19-year-old. And again, I just reiterate how blessed I am by that. So if you guys are interested in any of those things that I just mentioned, hit the join button down below right next to the subscribe button if you want more information on that. So the video we are doing today is actually part of a series that's been ongoing ever since I started my channel, where I pick my top 3 stocks for every single corresponding month. And the last installment of this series was obviously my top 3 stocks to buy in August of 2020 video. Now, August is all but behind us now, and we're all focused on September now, so I'm making the September video where I'm going to be going through my top 3 stock picks for September 2020. Now, the video I did a month ago on my August stocks did surprisingly well for how big my channel was at that time. I was only at around 6,000 subscribers when I recorded this video a month ago. And it got over 9,000 views and has over 650 likes. Now, those numbers blow me away. Don't get me wrong, but I think on this video, on the September edition of this series, we can get over 10,000 views and over 700 likes. So help me do that. Leave a like down below. Share this video with any friends or family that are interested in investing as well. Another thing I should mention before we dive into my top 3 stocks for September video is that I am not a financial advisor by any means, so be sure you guys do your own research and do your own due diligence on these companies. Another thing about me is that I invest for the long term with hopes for short-term gains. This means that the picks that I place in this video, as well as any of my past picks, as well as future picks in this series, they're not meant to be picks for the short term, and they're really picks for the long term. However, at the beginning of every one of these videos, I do go over my picks from the last month and just see how they've performed until this month to see if they were good short-term picks or not. However, like I just mentioned, all of my picks are longer-term picks, and I still strongly believe in all of the picks that I'm about to go over that I picked for August 2020. So let's get into pick number 1 of last month, which is when I recommended buying Tortoise Acquisition Corporation, who is a SPAC play that is acquiring Hyliion. Hyliion is a company focused on the electrification of drivetrains in tractors, semi-trucks, big rigs, and vehicles like that. They really have a moat and a niche in the electric vehicle industry, which is why I really liked and continue to like Hyliion. In addition to that, they already have revenues. They already have a product out there, and that product is rapidly expanding and gaining traction, so their revenue numbers are going to continue to increase and increase as time goes on. So that is what really separates Hyliion from a lot of other EV startup companies. Just the simple fact that they already have revenues, and these revenues aren't fake revenues. They're revenues that are directly tied to their products. So as you can see behind me and to your left, I recommended buying Tortoise Acquisition at $19 per share. And if we go to the current chart of Tortoise Acquisition, we can see that the stock price has over 2x'd in 1 month's time span. That is incredible return, and if any of you guys bought into Hyliion because of my suggestion last month, let me know down in the comment section, as well as how much money you've made from that investment. So currently, Tortoise Acquisition Corporation, or Hyliion, is sitting around $40 a share and has even surpassed that number a couple of times over the past 5 trading days. I believe there's still a lot of upside around this stock, and I think that the stock price is going to continue to increase, so I'm still recommending you guys to buy any shares you can get on any dips of this stock. Just know that if you invest in this company, you should be investing in it for the long term and not for the short term. The SPAC plays seem to be like pretty easy money, but there's always a chance that one could go sour, and there's always a chance that the deals between the blank check companies and the companies they're looking to acquire and merge with fall through. So unfortunately, I never got a chance to add this stock to my personal portfolio. I wanted to for a long time, but I never pulled the trigger and did it. And looking back on it, yeah, I kind of wish I did, but at the same time, I have holdings like Workhorse and CleanSpark and LCA and FLUX Power that I've already done very well, and even in some cases better than I would have done if I had added Tortoise Acquisition to my portfolio. So my second pick in August was actually a company I've talked about a lot on my channel, and this stock was really the beginning of the growth of my channel. I gained a lot of traction because I bought 1,500 shares at $2.84. And as we can see today, the share price is well over $18, and even at one point was over $22 per share. And even to this day, I hold all 1,500 shares of the company because I believe strongly in the future of the business. However, if we go back to the August video, I actually recommended buying this stock again at $16 a share and lower. Now, we did see some 15s. We actually saw some $14 per share levels in Workhorse this month. But like I just mentioned, those shares are now well over $18 a share. So that is still over 10% return on your investment if you bought the shares when I recommended you buying them in August in under a month's time, which is just incredible return when you consider the S&P 500 really only returns 8 to 10% in a year. Like I mentioned, I still own all 1,500 shares of Workhorse, but as you see, my average cost actually has increased over time from $2.84 to $4.89 because I have bought some extra shares to swing trade whenever Workhorse takes an unprecedented dip. And then I sell those shares at a higher cost, but because Robinhood does FIFO, or first in, first out trading, which means that the first shares you buy, no matter what, are going to be the first shares that get sold. So that has artificially raised my average cost. However, if you still look at that $4.89, I'm sure there's a lot of you that are even jealous of that number. But again, I still hold all 1,500 shares, and I have swung call options, I've swung additional shares on dips, and I've made some money on the side apart from my $20,000, or almost 300% that I've gained on this stock. I would say Workhorse is probably the second riskiest investment in my portfolio because a lot of their success of the stock price is deemed and dependent on one single catalyst, which is the $6.3 billion United States Postal Service contract. If you guys want more information on Workhorse, I have several videos on this company on my channel. Just click RexFinance, go to my channel and look through my videos, and you'll see a catalog of Workhorse videos talking about why I think they're going to win that contract and stuff like that. So my third pick for August was actually SiriusXM, which might surprise a lot of you. SiriusXM obviously has the satellite business, but some of you may not know that they recently acquired Pandora, which is one of the main competitors to Apple Music and Spotify, as well as they're looking to acquire one of the top podcasting companies called Stitcher by the end of Q3. On top of this, SiriusXM owns a minority stake in SoundCloud, and a lot of you know who SoundCloud is or what that company does, because there are so many people my age and even a little older or a little younger that want to be the next artist to make it big off of the SoundCloud platform. I truly believe that eventually SiriusXM is going to fully acquire SoundCloud. I don't know when that will take place, but it was the same scenario when they originally took a minority stake in Pandora and then eventually bought that company out entirely. So if you've followed my channel, you know that I don't put money into SiriusXM to make a quick gain. I put it there and I just park my unused capital or money that I don't have invested in other companies just so that I don't lose money to inflation, because SiriusXM is one of the only companies over the past 11 years that has produced a positive return every single year to its shareholders. So you're going to beat inflation while holding SiriusXM, as well as just having your money invested versus sitting in your account. SiriusXM has finished this month right around $5.90 a share, so depending on when you bought into SiriusXM, you haven't really gained or lost any money. So at the end of all of this, I would say I was 2 for 3 on my picks. I will not consider SiriusXM necessarily a win because there wasn't that great of a return that came from it. So now let's move on to what you guys came here for, and that is my 3 best stocks for September 2020. We're going to start off with stock pick number 1, which is FLUX Power. I actually currently already own this company. Now, FLUX Power is focused on the manufacturing of lithium-ion batteries, particularly in the material handling industry. And I actually did a 27-minute long in-depth video on this company, so after you hear what I say now, if you want more information or a deeper dive into what FLUX Power is and does, go find that video on my channel. I'll leave a link up there or a card up there that you guys can click on, and I'll leave a link to the video down in the description as well. So FLUX Power, like I just mentioned, manufactures lithium-ion batteries, and if you guys are a fan of Shell or Tortoise Acquisition or Hyliion, Hyliion actually got their company name from the lithium-ion, which is where you get the IION at the end of Hyliion. Hyliion uses lithium-ion batteries to power these drivetrains in the vehicles they manufacture. So that's just kind of a connection there if you guys were curious what lithium-ion is or does. Lithium-ion batteries save fleets so much money over the course of their life. It is a higher upfront cost for lithium-ion batteries versus the lead-acid batteries, but because of the longevity of the battery life, as well as just the other efficiencies that go along with lithium-ion batteries, these batteries save customers so much money over the lifespan of the battery. FLUX Power has some very, very high-grade, top-of-the-line customers that include Budweiser, Pepsi Cola, Delta Airlines, and the list goes on and on. FLUX Power's main business segment is actually focused on the electrification of forklifts. Most forklifts are powered by internal combustion propane, which is very, very dangerous and bad for the environment, or they're powered and fueled by gasoline. And only 2 to 4% of the addressable market has actually adopted these lithium-ion batteries, which means there's a lot of room for growth for FLUX Power. In addition to this, FLUX Power should be releasing their earnings sometime over the next 2 weeks, and I'm really looking forward to that earnings report. Like I mentioned, I'm already invested in this company. My average cost is $5 per share. I've already gained $1,000 or 20% on this investment. And I really think we're going to return a lot more than that. So it is not too late by any means to get in on this company, which is why I'm recommending it as my first pick for September. On top of this, FLUX Power has several other segments of their business that are focused on emerging markets, like warehouse robotics, and they even recently signed a partnership deal with EVSI, a publicly traded company named Envision Solar, who's placing electric vehicle charging plants across the country, and FLUX Power is going to be the battery provider for all of these plants that Envision Solar is putting up. So all the unused energy that is created by these solar panels by Envision Solar will be stored in FLUX Power's batteries, and from those batteries is where the charging will take place, and they will take the charge out of those batteries and put it in to the electric vehicle battery. So obviously, I don't need to explain that very much. There is tremendous upside for that market. And on top of all of this, they have another segment that's focused on ground support equipment, which are like the luggage vehicles you see in airports. And airports across the world are shifting their focus to the use and consumption of cleaner energy. And so far as the industry has shifted, airports are leaning towards lithium-ion batteries for that cleaner energy. So obviously that is in FLUX Power's favor, especially since they are focused on the ground support equipment and other things like that inside of airports. Delta Airlines is already one of their customers, and Delta Airlines has been globally recognized as one of the early movers for adoption of new technology historically. And a lot of times if Delta Airlines buys into certain technology, other companies and other airlines follow suit later on. Now, I do have to say, FLUX Power's financials are not in great shape by any stretch of the imagination. In particular, their balance sheet is pretty ugly. Now, the reason I'm not worried about that is because they have a gross margin expansion plan in place, and they're already achieving the results they aimed for through that expansion plan. On top of that, the CEO was heavily involved in lots of top companies around the world in financial accounting or CFO roles. So he has a great financial mind, and he has lots and lots of recommendations on his LinkedIn profile and is highly regarded as one of the best financial minds in the business. On top of that, FLUX Power's current CFO, Chief Financial Officer, was nominated for CFO of the Year this current year. So when we have those two guys in charge of this company, I'm going to believe that they know what they're doing. They know how to fix this problem of the balance sheet. I'm going to put my trust in them. Now, I will say this is by far the riskiest investment in my portfolio currently, but I also anticipate it to have a tremendous upside to it. So moving on to pick number 2, we have One Stop Systems. Ticker symbol is OSS. This is a $2.50 per share company. I haven't talked much about this company on my channel, and this is really one of the first times I'm going to take a deeper dive into what OSS does. I don't hold any current position in One Stop Systems, but this is one I'm really looking at eventually potentially opening a position in. OSS, or One Stop Systems, is at the forefront of the AI industry. AI stands for Artificial Intelligence. They are the developers of AI on the fly, which I'll explain in just a few seconds. In addition to this, OSS has some of the fastest computing capabilities in the market currently. NVIDIA and AMD are both customers, which tells you how big and how important and how valuable OSS's product is to computing companies like AMD and NVIDIA. Now I'm going to try and explain AI on the fly without getting too technical. You guys can do your own research into this company if you're more curious about what AI on the fly is beyond what I'm about to tell you. Basically what AI on the fly is OSS's product, this AI on the fly, delivers information and data faster than anywhere else available. This means it's faster than pulling data from even the nearest cloud. And you might be thinking, well, if that's the case, that's only saving like hundredths to thousandths of a second. But those hundredths and thousandths of a second can add up to a lot and can save lives. For example, OSS is heavily invested in the autonomous vehicle adoption. Now, with OSS's AI on the fly, it allows these autonomous vehicles to detect danger, or if somebody all of a sudden walks in front of your autonomous vehicle while you're in motion, the AI on the fly doesn't have to go to the nearest cloud to get the information to tell it to stop the vehicle. It has that information on the fly, which means that could really save lives. In addition to this, OSS is heavily invested in the military applications market. Through OSS's product, there is way faster threat detection, which again, pretty clearly can save a lot of lives. When I say threat detection, I mean it detects landmines, it detects missiles and rockets that could potentially kill thousands of people faster, which would allow our defense systems to take quicker action. In addition to this, the AI on the fly is heavily invested in the autonomous movement of the industrial industry, particularly in the healthcare sector. Through the faster data transferring, this AI on the fly can save companies a lot of time and a lot of money when it comes down to the margins of products and services that other companies are wanting to create or dish out. So my last pick for September is Landcadia Holdings, ticker symbol LCA. This is another SPAC play similar to that of Hyliion or Tortoise Acquisition. LCA is going to acquire Golden Nugget Gaming, which is an online gambling casino. And again, it's the same case with this company. I have an entire video focused on Landcadia Holdings. If you guys want to go check it out, I'll leave a card up there for you to click on and also a link down in the description. Golden Nugget Gaming is led by one of the greatest business minds that is alive today. His name is Tillman Fertitta, also the owner of the Houston Rockets. And like I mentioned, they're focused on the online gambling industry, which is where they are the early mover. And they are already the leader in this industry in New Jersey. They had $27 million in revenue already come to them just from New Jersey alone. Now, the reason I really like Golden Nugget Gaming is because if we scroll down, we can see that the market cap of this company is only $600 million. And compared to DraftKings, who has a market cap of $12.5 billion, this company is really undervalued considering that Golden Nugget Gaming is already cash flow positive and DraftKings isn't even close yet. In addition to this, this is one of the few businesses in the entire market that actually benefits from the illness that we're currently dealing with. So if you guys are concerned that this illness is going to drag on and drag on and drag on for many, many years, This would be a good investment for you because lots of people aren't going to be safe or be comfortable enough with going to in-person casinos. Instead, they have the ease of access on their cell phone where they can gamble directly from their cell phone. They can sit in their chair in their living room at home and do this. In addition to this, the online gambling market has such better market opportunity than sports betting has, which is what DraftKings is entirely focused on. Sports betting leaves out almost half of the population because 95% of sports betting customers are of the male gender. That leaves out the entire female gender. However, online gambling is the opposite. There's 55% male gamblers and 45% female gamblers. So you're taking in an entire population as your addressable market instead of just half the population, which is what DraftKings has to work with. So I don't own any shares currently of LCA, but I bought $22.50 call options that expire on November 20th for $2.20. You can see I've already had 95% return on these call options. And I think this is a really, really great opportunity to buy into LCA for the first time or get back in if you sold out previously because we've seen a dip from the highs of almost $17 a share. So with that, guys, that's all I had for you guys today. If you liked any of these picks that I had or if you have any picks to add of your own, let me know down in the comments section. Leave a like if you guys enjoyed. Again, we're trying to hit that 700 like goal. That seems like a lot of likes, but I think you guys can surprise me as well as surprise yourselves. So hit the like button down below if you enjoyed this video. Have a great rest of your Monday and have a great Tuesday. I'll be back on Wednesday with a brand new video. Peace out.